Walk into any co-working space in Bali, Mexico City, or Lisbon, and you'll hear whispers. Just avoid going over 183 days in any country, and no government can touch you. It sounds bulletproof. Most countries do set 183 days as the line for tax residency. So stay under the radar everywhere, and it's like you're tax-free for life. It's a myth that's ruining lives. The reality is messier and far more dangerous than the fantasy. That 183-day threshold is only half the picture. Tax authorities aren't just checking your passport stamps. They're looking for deeper ties. Where you live, work, bank, keep your stuff, and even where you socialize. Modern tax systems look for things like your economic center of gravity, where you really earn your money, where your main clients are, where you keep your accounts. It's about where your life is anchored. Do you have a permanent home somewhere? Regular social, family, or business connections? Even if you duck under 183 days each year, returning to the same place over and over can count as having a habitual abode. Paperwork matters too. If you're registered locally, paying for utilities, getting mail at a local address, or holding local memberships, these all add up as evidence against you. And there's another trap most digital nomads miss: double taxation treaties. These international agreements are meant to ensure you don't get taxed twice on the same income. But they only work if you're a tax resident somewhere. If you're not clearly resident, you get no protection. That's what happened to Marcus, a cryptocurrency trader who thought he was being clever, avoiding any proper residence. Germany and Singapore both wanted a share of his profits, and without residency, he risked paying tax twice on everything. The threats don't end there. Source-based taxes hit you even if you're a stateless tax nomad. Work from a Vietnamese cafe? Earn money while in Mexico? Any country where you work can tax your income. Without a residency certificate, you can't claim treaty benefits or exemptions, and you're an easy target. And let's not forget the criminal risks. In today's world of automated bank reporting and global financial transparency, trying to disappear can trigger audits or criminal investigations. Tax authorities use data matching to spot people falling through the cracks. If your bank says you live in one country, your phone another, and you aren't officially resident anywhere, you're waving a red flag for authorities. This is what happened to James, an online course creator who never spent more than 183 days in the UK, always on the move. The tax authority couldn't have cared less about his day tracking. They zeroed in on his UK bank account, his parents' address on record, even a storage unit for his personal stuff. Since he couldn't prove residency anywhere else, the UK claimed him and demanded back taxes, penalties, and interest totaling over £200,000. He didn't have that money because he'd been living as if he owed none. For high net worth nomads, the risks are even greater. One entrepreneur sold his company for $50 million and assumed he'd avoid capital gains taxes by not being a resident anywhere. Wrong. Multiple countries made competing claims, and just sorting it out cost $500,000 in legal fees. Even your banking is at risk. Banks are turning away customers who can't prove residency, a sure sign of compliance risk. Many nomads see their accounts frozen or shut, or can't open new ones. Without residency, you lose the ability to move money at all. The smart move isn't to avoid tax residency, it's to choose it intentionally. Strategic residency means you pick a country that suits your lifestyle and goals and make it official. There are options. Some countries only tax local income, so if you earn abroad, that income can be tax-free. Others offer nomad visas and special tax regimes with low thresholds for physical presence. Certain countries, like Georgia, have flat tax rates and simple systems. Some, such as the UAE or Monaco, offer legitimate zero-tax residency for those who qualify. Building a proper plan means more than showing up once a year. You need to build real, provable ties, like spending a meaningful amount of time there, setting up local economic activity or accounts, filing your paperwork, and integrating your lifestyle. It's about aligning your personal, business, and legal affairs. Best of all, when you have real documented tax residency, you get certificates from the authorities to prove it. These are your shield against audits and your gateway to treaty protections. They show you aren't gaming the system, you're complying with it. If you get it wrong, the price is steep. Besides back taxes, penalties, and interest, you'll likely face huge legal and accounting bills. International tax enforcement is only getting tighter. Countries now share more financial and personal data than ever before. The only answer is to get serious and take control. If you're living the nomad lifestyle without a clear tax residency, now is the time to act. The more you wait, the more complicated and costly things become. Assess your ties honestly. Figure out where you're most at risk. Then work with experts who can help you restructure, get compliant, and secure your future. If you want to reduce your taxes to single digits, make your assets impossible for anyone to touch, and gain more freedom with second citizenships, get in touch with Liberty Mundo and book a consultation call. We will help you develop a complete blueprint to organize your life to safeguard your wealth and your freedom. Follow the link in the description for more details. Thanks for watching, and see you in the next one.